Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Checking in on SPY IWM and QQQ heading into the FOMC tomorrow, 2 p.m. Eastern. The bulls are in full control, right on the verge of all-time highs. Nice follow-through, gap up, open, and a close at the high of the day. So the only real resistance left is 244.61 and 245.01. We came about, 0.25% away from an all-time high, closing with bullish momentum. And this is how we know it's sector rotation going on. We see the tech sector hit hard, and the market is not responding to that in any way, shape, or form. Tech sector is the largest weight in the S&P 500, so we do know that money is going elsewhere to keep this market propped up. So looking at the weekly time frame, we have that no confirmation of the bearish reversal candlestick, holding exponential moving average support, continuation to the upside, and again, looking at SPY on the daily time frame, this is the highest price that we've ever seen besides just one other day. So that tells us that the market is extremely strong and money is going into other places, and we're not seeing any bearish action in this market still. So IWM is also very strong, right there behind SPY in terms of ranking of strength, I'd say, out of these three at this point in time. And we've got a bull break of the inside bar, upper Bollinger Band daily resistance, 142.31, 142.90 are the only two resistance levels left. Pretty much the same situation as SPY. The bulls are positioned really well heading into the FOMC tomorrow, and the weekly time frame in breakout mode above the upper Bollinger Band after being rejected many times from that level. We closed above it last week, and the bulls want to close above it again this week. 141.81 is the level to close above by the end of the day Friday, and we're on the verge of a bullish MACD cross. Last time we had a bullish MACD cross with all-time highs, we had a huge breakout follow-through, so might not see that kind of same bullish momentum, but that would let us know that the bulls are certainly in full control. So QQQ has dropped to one of the weakest now of the three in terms of the short-term action because of its weight in the tech sector. So we have pulled back. We pulled back 2 days, much more significantly, big bear volume. On this bounce, we are rejecting from the daily middle Bollinger Band resistance, and the exponential resistances are right there as well. So if we cannot get over those levels, we know that this bounce doesn't have a ton of bullish momentum behind it. I am looking for a lower high to form on this bounce, an equilibrium pattern to play out after all this volume and volatility, where we see a lower high. Maybe our lower high is going to be at these moving averages. Even if we get over them, I will still anticipate a lower high to form. Then we'll consolidate, look for a higher low, lower high, tightening range until we see a clear break, likely sometime next week. Weekly time frame for QQQ still very strong, so we have to keep everything in perspective. It's the weakest action we've seen in 2017, but we have not even seen 2 red weeks in a row in a long time, in months. And we are holding up above the exponential moving average supports, keeping those levels, and a bullish recovery so far this week. We have 3 trading days left to go. It would take a pretty significant pullback over the next 3 days for this candlestick to lose the exponential support for the first time in 2017 and see that bearish action follow through. But as of right now, bulls looking really good on all of these time frames, all of these markets, and we're not seeing a change in the bullish trend at this point in time. It would require this tech sector and the QQQs here to see lower highs and then lower lows, breaking the low of the dump that we saw at this point. So that's what we've got heading into tomorrow. Bulls are positioned really well for new all-time highs for the FOMC. FOMC is pretty much a sure thing in terms of the market anticipating a rate hike and being well prepared for that. So hard to imagine really any surprises that would cause a significant pullback. Certainly we'll be prepared for it, but as of right now, all bulls, all the time. Appreciate you watching. We'll check back in tomorrow.